Hello, very good morning to all, and welcome back to a brand new week. I hope that you all have a great and restful National Day weekend. Very good morning to all. Today will be Monday, the 11th of August 2025. So, as usual, before we kickstart our daily dose of market insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we jump straight into the gist of our daily dose on a daily basis, where we covered the intraday technical outlook of the four major US dollar pair, the six global major stock indices, as well as the two key commodities market, which is gold XAU/USD and West Texas crude oil. Let's have a recap what has taken shape in terms of the intraday movement of these broad-based cross-asset classes from Friday and into early today's Asia session before the start of our daily dose of market insights over here. It seems to me there is some background noise that is ongoing. Give me a minute. Let me check. Okay, my apologies. Give me a minute. Okay, hopefully now the voice is much better. I think there seems to be some background if you call it buzzing sound at the background, right? So hopefully that the noise has been off right now. So okay, yeah, where was I? Yeah. So before we jump straight into the intraday technical outlook of those broad-based cross asset classes, let's have a recap first. What has taken shape on Friday and in over the weekend, and as well as in early today's Asia session in terms of economic data release and relevant news flow. So let's start with last Friday first over here. So over last Friday, if you look at the performance of the major US stock indices, market has been pretty much rosy, where the S&P and the Nasdaq 100 continues to scale to fresh all-time high. So what we could see is that the higher beta Nasdaq 100 continues to bask in the limelight, up by positive 0.95%, almost 1%. Followed by the SPX 500 up by 0.78%. Then the Dow Jones and the Russell 2000 lagged behind, but still managed to close with a positive gain on last Friday, 0.47% for the Dow Jones Industrial Average and 0.17% for the Russell 2000 over here. So what I could see over here is that the mega cap technology stocks in the US stock market continues to lead the fort on last Friday, where we see a very deeply in the green on the on the 5 mega cap technology stocks. Nvidia up 1.1% to fresh all-time high. Apple continues to bask in the limelight, a positive 4.24% after that positive news flow stating that Apple will be likely exempted from that universal US semiconductor related tariffs, where the CEO Tim Cook convinced US President Trump that majority of the manufacturing plant of Apple globally will be shifted to the US. So Apple continued to bask in the limelight, positive 4.24% after previously lagging behind its peers in the last 3 months. So Google up positive 2.44%, followed by Meta Platforms, which is i.e. The parent company of Facebook, up almost 1%, and Microsoft marginally up 0.23%. So net overall, we continue to see a very strong momentum play taking shape in the US stock market, because the respective trend, yes, is going up for the last 3 to 4 months, but there is showing no signs of exhaustion yet, being supported by the number one, the AI growth optimism of these mega cap technology stocks. And later I'll share with you what are the key new intraday levels to watch on the SPX 500, the Nasdaq 100, and as well as the lagging US Wall Street 30, which represent the Dow Jones Industrial Average over here. And also over the weekend, there's this, not over the weekend, on last Friday, there's this confusion about the gold market over here. So previously, gold were actually hit by this US tariff over here. So this US tariff is being kind of pre-announced by US White House administration on Friday. It's more regarding this Swiss goods over here. So we know that Switzerland has been slapped with 39% tariff for Swiss product heading into US, and majority of this Swiss product has been refined gold bullion shipping from Switzerland to the US. So on Friday, there was actually this saying that Trump administration ruling said that gold bars will be subject to tariffs, which stunned traders, which has assumed that they will be exempted in April. So that causes potentially the flow of bullions around the world and potentially for the smooth functioning of the US futures contract. So the gold futures actually rallied to a fresh all-time high on Friday. So this is what I mean over here. So if you go to the gold futures contract, all right, over here, let me expand it. Okay, so at the top of my chart over here is the spot gold, all right, that we cover on a daily basis. That means XAU/USD spot gold. So spot gold fresh all-time high was previously only was hit on the 22nd of April 2025 at $3,500 per USD. So that actually hit on 22nd of April. Then thereafter, spot gold XAU/USD traded in a sideways trend for almost about 3 months plus. Whereas if you look at the futures contract over here, this is the gold futures, which is different from spot gold, i.e. it's a gold futures quoted in the US futures exchange. It actually spiked up to a fresh all-time high on Friday upon that potential US tariff on gold bars, right, heading into US. So what we could see over here is that it printed a fresh all-time high of 3,534 on Friday. Then thereafter, it actually did some profit taking. Why? Because US, we call it officials actually stated that there was actually a potential miscommunication that is going on that last Friday potential, we call it tariff leak over here. So gold futures in New York declined as traders await for clarification from the White House over its tariff policy over here. So that particular tariff policy that was being reported by Bloomberg and other major news report is not 100% certainty. So that causes actually gold prices futures to slip, and also causing the gold spot as well, the XAU/USD, to actually inch down by a negative 0.6% as we are speaking right now. So later I'll touch on what are the key news levels to watch on the spot gold XAU/USD when I cover the second segment of today's daily dose over here. And one more particular news flow I want to highlight on Friday is more pertaining to geopolitical risk tension between Russia and Ukraine, and that could have an impact on oil prices over here. So it was reported that Putin and Trump finally agreed to meet in person on this Friday in Alaska to actually trash out a ceasefire deal between Russia and Ukraine that is heading into a fourth year between this ongoing war between these two nations, Russia and Ukraine. So with a potential ceasefire deal that could potentially ink out between Russia and Ukraine, brokered by US President Trump, that could potentially reduce sanction on Russia oils hitting into the global market, and that could actually also see further dampening effect on WTI crude oil prices. So WTI crude oil price continues to decline on Friday over here. So over on Friday, the West Texas crude oil inched down lower by negative 0.74% after that bearish breakdown from that 4-week plus of range support that was previously in place since late June 2025. So later I'll touch on what are the key levels to watch out for West Texas crude oil for today, and as well as the directional bias. All right. So over the weekend, there is also some China-related data that I want to share with you guys. Will be more pertaining to the state of that dreadful deflationary risk spiral in China that has been playing out post-COVID years. That means since 2020. over here. So what do I mean by this is the consumer price index of China. Let me share with you guys. Yeah, so the CPI rate of China, the consumer inflation rate of China, actually came in better than expected. So it was no growth at 0%. But market is expecting it to inch down lower at negative 0.1% over here, but it came in better than expected. And the PPI, the producer price index, which is constituted of more like factory gate prices, but that continues to actually decline over here. So market is expecting a slight improvement to negative 3.3%. It continues to actually contract at a similar pace of the previous month of June at negative 3.6%. So this factory gate prices is more likely due to a reduction of manufacturing goods coming out from China factories to counter with US tariffs over here. So now let's look at the trend of the CPI over here. Okay, so on my screen, you could see at the top of my screen over here is that this is the dark blue line is the consumer inflation headline numbers, which I shared with you earlier on this particular trading economics over here. Where is it? Yeah, this is the one, 0%. So if you look at the trend, yes, it's kind of going nowhere at 0%. So, but if you strip off those volatile items like food and energy price, the core inflation rate of China, excluding fresh food and energy, actually continues to improve since February. And for the month of July, it actually accelerated to positive 0.8% year on year. So that actually indicate to us that there is some kind of spending by consumer in relation with some of the subsidies that is being introduced by the central government, like the subsidies to actually kind of do one-to-one exchange of all electronic appliance products. So that actually improve this core consumer inflation trend to positive 0.8% in the month of July. That actually kind of negate the deflationary risk spiral. But do not forget, we also got to monitor the PPI rate over here. So the PPI rate, okay, continues to actually be depressed on the downside at negative 3.6% year on year in the month of July, after that earlier so-called false hope recovery from June 2023 to July 2024, where previously the contraction tried to actually string down. So right now the contraction continues to inch downwards. This is much likelihood to actually offset that US tariffs products on China goods heading out globally to the rest of the world. All right, so net overall is more like a mixed performance or mixed results coming out from the inflation data from China. So that actually saw the so-called the Hang Seng index continues to rally as well. So the Hang Seng is up by 0.21%, didn't fall that much, didn't fall at all, and the Hang Seng Tech is up 0.10%. And most interestingly over here is that the Nikkei 225 continues to inch up higher over here, as we see, as it continues to almost want to hit a fresh all-time high. So later I'll share with you the Japan 225, where we cover on a daily basis. That's our CFD index, our platform. What are the latest key levels to watch? So the Nikkei 225 is now continues to bust in the bullish limelight, up by positive 1.85%. And the rest of the other Asia benchmark stock indices also continues to be rather rosy. The Kospi 200 is up by 0.19% over here. The TAIEX, which is the benchmark index for the Taiwan stock market, is up by 0.15%, whereas we see a bit of profit taking on the STI, a negative 0.2%. Then the ASX 200 continues to scale fresh all-time high, now up by 0.26%. So overall, I would say that it's more of a bullish momentum that is still being seen on the Asia Pacific stock indices over here. Right, so now up next will be the FX market over, right? So for the FX market, what we could see over here is that since last Friday, the dollar has been trading in a lackluster fashion over here. So this is the 5-day rolling performance of the US dollar against other major currency as of 11th of August right now while we are speaking. So the dollar continues to remains rather in a lackluster fashion. The dollar continues to underperform against the Kiwi, against the euro, against the Aussie. At the moment, from a 5-day rolling performance, down by negative 0.7%. The dollar against the Kiwi, the dollar is down by negative 0.8% against the euro, and the dollar is down by negative 0.8% against the Aussie, and fare the weakest against the sterling, where the dollar is down by negative 1.25%, where the Bank of England on Thursday has a kind of a hawkish cut instead rather than the dovish cut. Yes, Bank of England cut its interest rate, but Guardian still points towards a kind of a wait and see approach for the next monetary policy meeting, stating a sticky inflationary trend in the UK. So that causes the dollar to actually plummet the worst against the sterling pound, which also came in within our expectations. So for those who followed my daily dose on a daily basis, since last week, we have been playing this bearish bias against the dollar on our 4 major US dollar pair that we covered on a daily basis. So despite the fact that the dollar yen traded sideways last week, but if you look at the 1-day rolling performance of the dollar yen now is also inching downwards as well. All right, so from the 1-day rolling performance basis, the 3 weakest currency against the dollar so far right now is the dollar is weakest against these 3 currencies so far as we're speaking, based on the 1-day rolling performance, will be the euro, the Swiss franc, and the dollar yen. So very interesting movement on the dollar yen this week because dollar yen has been consolidating in the sideways range for last week. So perhaps this week the dollar yen could play a catch up and do that bearish breakdown below that last week minor tight sideways range configuration. So later I'll touch on more about that dollar yen short-term intraday technical outlook when I cover the second segment of today's daily dose. All right, so now let us proceed with the second segment of the daily dose. So I've covered much on the first segment, which is the relate to you guys what has happened on Friday and today's Asia session over here in terms of the relevant news flow and economic data release. All right, so before I go to the second segment, let me expand my screen over here. All right, so let us start with the intraday technical outlook for today on the FX market first. So the first currency that we cover will be the euro dollar. So for the euro dollar, it continues to actually trade above that 20-day moving average over here. Very positive. Why do I say that? Because the hourly RSI continues to be held by this ascending trend line support level since its low of 7th of August, indicating that positive bullish momentum still remains intact on the intraday basis for the euro dollar. Since the euro dollar hasn't broken above our first resistance zone after a test of it on Thursday, which is at 116.80, on the euro dollar, I do not want to be so aggressive and tighten my short-term pivotal support level to 116.30 unless during the European session we could have a breakout above 117.05. Then I would tighten the short-term pivotal support to 116.30, which confluence with the 20-day moving average. So for now, I will be still using the same pivotal support that I have on Friday, which on Thursday, pardon me, because Friday we have a short break at 115.90. So 115.90 short-term pivotal support level on the euro dollar continues to actually have that bullish bias for today. Above 117.05 exposes the next intermediate resistance zone at 117.70/117.90, which also confluence with the 1.236 Fibo extension on this ongoing bullish impulsive up move sequence since the low of 1st of August 2025. So however, if price action starts to do a U-turn and break down below 115.90 with an hourly close below it, today's intraday bullish bias will be invalidated to revisit the next intermediate support level at 115.20. A breakdown below it may see a deeper decline towards 114.60 next. So i.e. still maintaining that bullish bias on the euro dollar, watching 115.90 and 117.05, a breakout above 117.05. I will tighten my short-term pivotal support level to 116.30 as the euro dollar continues to be evolving in this short-term intraday bullish impulsive up move sequence. Up next will be the sterling pound. So the sterling pound managed to hit our resistance level on last Friday and Thursday, i.e. at 134.45. So with that, he also has to stage that bullish breakout above this former minor descending channel resistance that was previously in place since 1st of July high over here. So with that bullish breakout of this former minor descending channel resistance, and as well as the hourly RSI continues to be helped by this parallel ascending trend line support that has been in place since 1st of August, hasn't hit the overbought level yet so far as we are speaking right now in today's Asia session, indicating that the bullish momentum trend on a very short-term intraday basis still remains intact. So with that, I will have a tightened short-term pivotal support level for today, with the zone of that 20-day moving average, which is at 134 figure, 133.80 as my short-term pivotal support zone. Maintain my bullish bias on the sterling dollar. Next resistance level to watch will be 135.10, which confluence with the 50-day moving average. Above it, seek out 135.55, with confluence with the 2 times pivot extension of this ongoing bullish impulsive up move sequence on the short-term basis since the low of 1st of August this year, and the minor swing high area of 24th of July. Only a bearish breakdown and an hourly close below 133.80 will invalidate today's intraday bullish bias on the sterling dollar to kickstart another round of choppy minor corrective decline sequence, revisiting 133.15. A breakdown below 133.15, seek out a deeper minor corrective pullback move towards the next near-term support level, which is the minor swing low area of 4th of August and 5th of August at 132.60. Next up will be the Asia Pacific currency against the dollar, which is the Aussie dollar. So the Aussie dollar continues to trade sideways after hitting our first resistance level on Thursday at 65.40/65.55 over here, but continues to be held above the 50-day moving average and the 20-day moving average. So no change since it can't break out above 65.50. I will still be using 65.05. That will be my first support level to watch. Pivotal support still remains at 64.80 over here. So overall, still maintaining my bullish intraday outlook on the Aussie dollar, using 64.80 as my short-term pivotal support level. Above 65.50 exposes the next near-term resistance level at 65.80 next, which is the minor swing high area of 28th of July, as market awaits for RBA monetary policy decision due tomorrow. However, if price action do a bearish breakdown below 64.80, that would negate today's bullish bias to see a retest on last Tuesday minor swing low at 64.50 next. So that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen, after plunging from 1st of August to Tuesday minor swing low area at 146.60, it just traded to be a sideways range. But what I could see over here is that it got rejected exactly at the 20-day moving average, so indicating there is some form of bearish biasness coming back into the picture on the dollar yen, rejecting at the 20-day moving average. So with that, I will have a tightened short-term pivotal resistance for today, shift it slightly downwards to be at 148.15, which is the minor swing high area of 4th of August, very closely to the 20-day moving average that is acting as an intermediate resistance at 147.95 right now. So using a slightly adjusted downward pivotal resistance at 148.15 on the dollar yen, maintain my bearish bias outlook on the intraday basis. First support level to watch will be the range support area at 146.80/60. A breakdown below it trigger off a minor range bearish breakdown to seek out the next intermediate support level at 145.85 in first step, which is the minor swing low area of 24th of July and the 50-day moving average. However, if price action managed to do a U-turn and break out above 148.15, that would invalidate today's bearish bias to see a squeeze up towards 148.75. Failure to hold at 148.75 may see a further push up towards 149.15, which is the key 200-day moving average as well. So that's for the dollar yen, still maintaining our intraday bearish bias, but using a slightly adjusted downward pivotal resistance level at 148.15, very close to the rejection area at the 20-day moving average, which is at 147.95. So that's for the dollar yen, and that's also sum up the intraday technical outlook on the 4 major US dollar pair. So now let us now proceed to the major stock indices. All right, over here, starting with the Hong Kong 33 over here. So the Hong Kong 33 managed to actually bounce off over here. So what we could do over here is that the hourly RSI also continues to hold up with this parallel ascending trend line. taken from the low of 31st of July. And right now in today's Asia session, it managed to have a steeper higher high, indicating that bullish momentum remains intact on the Hong Kong 33. All right, so with that, I will have a slightly adjusted pivotal support level in line with today's Asia session low, correspond to last Friday Asia session low as well at 24,790. So using 24,790 as my short-term pivotal support level, maintain my intraday bullish bias on the Hong Kong 33 that is representing the Hang Seng Index. First resistance level to watch will be last Thursday swing high area before that pullback takes shape over here on Friday. Okay, that will be at 25,090. 25,090 over here. Oops. All right. Above 25,090, seek out 25,220, which is the minor congestion area of 29th of June and 30th of July. Sorry, yeah, 29th of July and 30th of July, pardon me. Only a bearish breakdown below the 24,790 short-term adjusted short-term pivotal support level that would negate today's bullish bias to seek out a minor dip towards the next near-term support level at 24,600. A breakdown below 24,600 will trigger off a deeper minor corrective pullback towards 24,380, which correspond very closely to the rising 50-day moving average and as well as the medium-term ascending channel support that is in place since the low of 2nd of June. All right, so i.e. still maintaining my intraday bullish bias with a slightly adjusted upward pivotal support level for the Hong Kong 33 at 24,790. Next up will be the Japan 225, which is representing the Nikkei 225. So Japan 225 today it almost tested the fresh all-time high level at 42,513. That was printed in last year, July 2024. So today's intraday high is 42,497, very close to 42,513. So what I could see over here is that the hourly RSI is now basking in the overbought region over here. So within this overbought region, there could be a minor pullback to retest the former 24th of July minor swing high, now turns into a minor pullback support at 41,975. So I'll be using a Titan short-term pivotal support for today at 41,610 level. So what is 41,610? If you do the Fibo retracement of this ongoing bullish impulsive up move sequence on the intraday minor trend basis from the low of 4th of August all the way up to the current high for today, it corresponds very closely to the 23.6% Fibo retracement. So using a Titan short-term pivotal support level to cap any minor pullback at 41,610 level, we will still maintain a intraday bullish bias on the Japan 225. Above 42,513 exposes the next intermediate resistance level, which is at 43,100 / 43,000. 230, which is being defined by a Fibo extension cluster level. Only a bearish breakdown below 41,610 will negate today's bullish bias to seek out a deeper minor corrective pullback to expose 41,285. Below it, trigger off a deeper entrenched minor corrective pullback to retest the 20-day moving average at 40,860 / 40,645 next. So that's for the Japan 225. Still maintaining a bullish bias in any minor pullback scenario using a Titan short-term pivotal support level at 41,610 on the Japan 225. Next up will be the European benchmark stock index, which is the Germany 30. So the Germany 30 managed to broke out above our neutrality range on Friday. Still recall that previously we go for our break on last Friday, which is Thursday. We have a neutrality stance between 23,930 and 23,790 due to mixed element. But right now there's a bullish breakout above 23,990, and also price action managed to trade back above the 20-day and the 50-day moving average as well, indicating that the bullish trend has starts to creep back into the Germany 30 CFD index. So with that, I got to respect the positive price action and flip to a intraday bullish bias for today for the Germany 30. So using this breakout above the upper neutrality range, which is 23,990, now turns into a critical short-term intraday pullback support for today, which also converges with the 50-day moving average as well. So with that, 23,990 for sure will be our short-term pivotal support today for our bullish buyers stance on the Germany 30 index. All right, so this will be my short-term pivotal support level over here. So first support level to watch will be the 20-day moving average at this 24,120 level over here. So this will be the next support level. All right, so to sum up, 23,990 short-term pivotal support level for the Germany 30. For today, we'll flip to a intraday bullish bias. Next resistance level, 23,140, which is the former minor swing high area of 24th of June and 28th of July over here. A breakout above it, seek out a next resistance level, which is being defined by a Fibo extension cluster level at 24,720. However, a price action breakdown below 23,990, that means a breakdown below the 50-day moving average, then I will say that last Friday push up is a failure bullish breakout, and where Germany 30 may continues to trend downwards to shape another round of choppy corrective decline sequence, exposing the next near-term support level in first step at 23,790, followed by 23,600 next. All right, over here. Yeah, 23,600 next. So that's for the Germany 30. Next up will be the US Wall Street 30 over here. So the US Wall Street 30 on Friday, it actually came down, did a bullish reversal right exactly at our pivotal support level at 43,750. All right, so this 43,750 continues to remain the key support level to watch for today. That's also constitute the 50-day moving average as well over here. All right, so this is a 50-day moving average. So as long as the 43,750 short-term pivotal support holds, we continues to expect a recovery bias on the US Wall Street 30, hence maintaining our bullish bias on it for today as well. First resistance is got to surpass will be the 43,390 level, where after breaking down this level on Friday, it shaped that very steep intraday sell-off candlestick from last Thursday US session at the start of it, which is at this 10 p.m. Singapore hour. All right, over here. So above 44,390, then I could tighten my short-term pivotal support level towards to 44,010. Looking out for the next intermediate resistance to come in at this 44,780 next in the first step. All right. However, a price action breakdown below 43,750 that would invalidate today's intraday bullish bias. Pardon me. A breakdown below 43,750 short-term pivotal support that would invalidate today's intraday bullish bias recovery stance on the US Wall Street 30 to seek out a deeper minor corrective pullback in first step to retest the critical 1st of August swing low area at 43,475. Only a breakdown below 43,475 will trigger off another round of corrective decline sequence extending further towards the downside at 43,170 next, which is the former minor swing high of 25th of June. Right, so that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 almost hit our all-time high area at 6,430, 6,450 over here before okay, almost hit this all-time high area. All right, before it just traded kind of a sideways in today's, not sideways, doing a further push up in today's Asia session, about to hit that fresh all-time high area at 6,430, 6,450. So with that, price action also managed to survive at the bounce off from the 50-day moving the 20-day moving average after that sell off on Friday. So what we could see over here is that the RSI, there is no clear bearish divergence on the RSI over here. So with that, we would also expect the S&P 500 for today to have to maintain my bullish bias stance, but I will have a adjusted short-term pivotal support zone for today, which was the zone that it managed to bounce off on Friday, and also the 20-day moving average at 6,347, 6,330. All right, so this will be my pivotal support zone to maintain my intraday bullish bias on the SPX 500 for today. Okay, let me copy that up, put it here. So this will be 6,347, 6,330. All right, 30. Okay, so still maintain my bullish bias on the SPX 500 using a tighten adjusted short-term pivotal support zone for today at 6,347, 6,330, at equaling to seek out to retest the current all-time high area at 6,430, 6,450. Above it, seek out the next resistance zone at 6,470, 6,490, which is being confluenced by a Fibo extension cluster level. Only a breakdown below 6,330 that would negate today's intraday bullish bias to see a deeper minor corrective pullback to revisit 6,305, 6,290, which is the minor swing low area of last Wednesday, and as well as the area where this lower boundary of this major medium-term ascending channel met, which is the low of 23rd of May this year. Okay, so that's for the SPX 500, still maintaining my intraday bullish bias using 6,347, 6,330 Titan short-term pivotal support zone. Next up, lastly, will be the NASDAQ 100 over here. So the NASDAQ 100 also managed to actually shape a higher high, and right now in today's Asia session, it also attempt to actually retest the current all-time high at 23,710. So RSI continues to inch higher, no sign of a bearish divergence, indicating that bullish momentum still remains intact on the NASDAQ 100, which I got to respect it. So with that, still maintain my intraday bullish bias on the NASDAQ 100 using a tightened short-term pivotal support level for today at 23,295, which is coming very close to the rising 20-day moving average, and 23,295 is clearly the minor V-shaped recovery that was being seen after that sell-off on last Thursday over here. Right, so this will be my pivotal tightened pivotal support level at 23,295. All right, so this will be my next support level to watch. Okay, using a Titan pivotal support at 23,295, maintain my intraday bullish bias for the NASDAQ 100. Next resistance level to watch will be 24,020, which is the upper limit of this medium-term ascending channel taken from the low of May 2025, and also a Fibo extension cluster level as well at 24,020. However, a price action breakdown below 23,295 that would negate today's intraday bullish bias to seek out another round of choppy minor corrective decline towards 23,130. A breakdown below 23,130 will trigger off a deeper minor corrective decline towards 22,900 next. All right, so that sum up the intraday technical outlook on the NASDAQ 100 and as well as the 6 major stock indices. So let us now focus our attention to the commodities market, starting with gold XAU/USD. So for gold XAU/USD, it has been tested since on Friday and Thursday. On Friday, early Asia session come break above the first resistance level at 3,402, now shaping a minor corrective pullback as market continues to wait for clarification on that so-called not confirmed gold tariffs that going to be imposed by US White House. So no change in terms of level. First support level to watch will be at this 3,360, which is the 20-day moving average and the 50-day moving average. Pivotal support remains the same as last Thursday at 3,334, unless we have a clear bullish breakout above 3,402, then I will tighten my short-term pivotal support towards 3,560. So for now, still maintains the same bullish in any dips over here using 3,300 3,334 as my short-term pivotal support as it continues to evolve within this medium-term range configuration with the bias heading towards the retest the upper limit of that medium range configuration at 3,439, 3,446, 3,439, 3,447 thereafter, which is the swing high area of 23rd of July and the swing high area of 16th of June. However, if price action starts to break down below 3,334, that would invalidate today's intraday bullish bias within that range configuration for it to float down towards the lower limit of this medium-term range configuration, exposing the next near-term support level at 3,310. A breakdown below 3,310, see further weakness towards the minor swing low area of 3,283 over here, 3,283. Right, so that's sum up for gold. Next up will be the West Texas crude oil over here. So the West Texas crude oil, let us go on the hourly chart. So on the hourly chart on last Friday, we were bearish and it hit our, not last Thursday, sorry, it was last Friday, we went on a short break. So last Thursday we were bearish. So it hit our first support level over here at 64.06, bounced a bit, and now attempting to shape a lower low over here as we speak in today's Asia session. So what we could see over here is that the hourly RSI continues to be kept by this descending trend line and below that 50 level mark, indicating the lack of upside momentum. So with that, we will continue to maintain our bearish bias stance on this West Texas crude oil over here. So with that, I will have a adjusted short-term pivotal support level, pivotal resistance level to be here at 65.60. Okay, using a adjusted pivotal resistance level at 65.60, maintain my intraday bearish bias on the West Texas oil. Next two near-term support level to watch will be 62.50 followed by 61.30. So what's 62.50 over here? So 62.50 is the minor swing low area of 3rd of June and 5th of June, and 61.30 is that former gap up support now turns into a resistance level at 61.30. However, if price action, okay, that gap up was being formed previously on the 30th of May, all right, 30th of May this year. However, if price action instead of floating downwards and it starts to inch up and have an hourly close above 65.60, that would invalidate today's intraday bearish bias on West Texas crude oil to see a minor corrective rebound sequence taking shape again, or a mean reversion rebound sequence taking shape on a minor scale to revisit 67.40, which confluence with the very closely the 20 and the 50-day moving average, and this minor congestion area here of 29th of July and 4th of August. And if we do the Fibo retracement of this ongoing decline from the high of 31st of July all the way down to the low of last Friday, that constitute the 50% Fibo retracement. A breakout above 67.40 exposes the medium-term pivotal resistance level at 69.15/68.50 next, which constitute the golden ratio of 61.8% of the ongoing decline from the high of 30th of July all the way down to last Friday intraday low, and also the 200-day moving average as well. All right, so i.e. in a nutshell, still maintain a intraday bearish bias with a slightly adjusted downward pivotal resistance level to maintain that bearish bias using 65.60 as my short-term pivotal resistance level for today for West Texas oil. So that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's take a look at the economic calendar. What are the key data to look out for today on Friday? So on Friday, it will be much more of a very quiet session on Friday. No key data or event to look out for, but heading in towards on the 12th of August, we're going to be cautious. Why? Because 12th of August on Tuesday is the deadline of that US China trade rules. So still recall that key US officials negotiating on behalf of US White House, which is the Commerce Secretary, and as well as Scott Bessent, which is the US Treasury Secretary, stating that they both are optimism that the 12th of August deadline will be extended. But however, Scott Bessent mentioned that the honors or the final day still lies with US President Trump. So we know that Trump volatile nature, so good to be on the lookout as we head towards 12th of August, that expiry deadline on this current US China trade tariff truce date. So with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.